Hey guys, thank you so much. I've been trying to set up this call for a while, and thank you so much for making time to talk to us. I'm sure there's going to be a lot of information very valuable for the community, and I'm very curious about where this conversation will lead. So the very first question is the origin stories, and that goes for both of you. How did you get started into crypto?
Well, we both first started, because we've been actually a long time, a really long time ago. We bought a little bit of Bitcoin, like people do, but probably not enough that Chris got to like retire on an iPhone.
Never did
Yeah, not enough, but yeah, we got like a little bit, like way back in the day. I had my old gaming rig. I like mined like half a Bitcoin and then sold it for like $500 a little bit later, like that kind of thing. But nothing super serious. And then later, I was in a situation where my bank froze my accounts for reasons that were not very good reasons in Australia. And basically for a while, I couldn't get access to my things. And then I started really looking at crypto like a bit more seriously and being like, this shouldn't have happened. The way to fix it is way too difficult, etc., etc. I'm living in a country like Australia, which is a very good country by a lot of accounts. Like they have good financial rails and everything. So imagine if I was living in a bad country, like things would be like 10 times worse. So at that point, I started looking into things a lot more. I got more crypto at that point, and I actually started working with like a DeFi company doing like Rust and Wasm and stuff, and like the networking stack and everything. And then a bit later, I started getting into Solidity, working on a language, Raindex, because I was getting frustrated that there's a base layer to the crypto financial system, but the layer where you actually say how you want it to work is still very limited to a very elite few people who can write Solidity or coders with a lot of experience, and everyone else is sort of a consumer of that. And so I started getting more into how can we bring things a little bit closer to people, and been working on Raindex since, and then that turned into Raindex, and then that started getting into Cyclo at like the tokenomics level, and then I guess here we are, still working on all of those things.
Yeah, for me, I mean, like, so Dave and I have known each other since we went to school together. So we've known each other since we were 13. So it's been a while.
So there's some stories there that would be really funny.
Yeah. And we've been building stuff about as long, one thing or another. And actually, Dave, you started like properly coding because you were building up bands in MySpace, which is a good story.
MySpace.
Yeah.
Oh, that's a throwback. Throwback.
You're doing the CSS for the band's MySpace. Yeah. And then, and then I've always done music, and I had like we were building websites and stuff, and then I went into music for a bit, and I actually got signed to a label, and I went through the whole music industry thing, and eventually I got dropped and signed a bunch of things that I probably shouldn't have signed along the way for money, and I came out being like, oh, well, what would have been alternatives to raise money that I wouldn't have to go to labels who are basically like banks, but really they're like bank loans on extremely bad terms. And I had the idea to tokenize music royalties. So you could like tokenize your creative output and basically crowdfund funding for music. And I went to Dave and I was like, I've got the idea. Can you build it? And he was like, no, I won't. You should design yourself. Go. And like, I'd always done programming, but not as deep as Dave. And then I went and did the Crypto Zombies tutorial and like learned the basics of Solidity. And then I learned some front end stuff, and I built the proof of concept for that myself, and that never got off the ground, but it started the journey, and then now here we are.
Yeah, you definitely have more the musician look than the programmer.
Okay. Yeah.
I've been around a lot of musicians, so yeah, totally.
Yeah, that's quite a programmers and musicians go together. I think that's a thing.
Yeah, I mean, I'm an artist as well. I do photography and painting, and I'm also deeply excited about technology. When I was in junior high, in 7th grade, I actually got upgraded to the 12th grade programming class, and I built like a hangman on C++, I think it was something very similar, and I actually got second in the class, but then I never really took programming afterwards. So like I can understand it a little bit, but not enough to actually build stuff. But I think it's fascinating to just be like, oh, I want to build this, and then I just like you guys can build it. I think that's fascinating.
Yeah, I mean, you could do it. You just gotta go and do some tutorials and grind through a lot of broken stuff.
I love about the generation we're in now, man, especially with AI. Like your want to learn is only your ability to learn is only limited by your want at this point in life.
Yeah, I mean, I think that's probably always been the case with books, but yeah, it's supercharged with the internet and especially with AI.
When I was like 10, no, when I was like 14, 15, I wanted to learn magic, like magic tricks with cards. And man, like I sent my parents on a fucking journey on Vegas to try to find the right videos. And now you can just go on YouTube and like search for it. So I mean, there is a little bit of a difference, especially like maybe if you live in a first world country, then the access to information was easier.
That's true.
But yeah, no, it's curiosity. I think that's a superpower for sure.
Definitely.
Stubbornness to just keep trying as well.
Okay, so I have a few questions for you guys. And my first is, what have you learned about market making? Because I think that both in Cyclo and in Raindex, I mean, in a way, you are creating markets. And like, what things could you share with us about that?
Yeah, well, we definitely are creating markets on Raindex because that's the only way that it actually works. Like when you put a order up, it's always a long-running strategy. So it's more like Uniswap or something in the way that it actually works as the mechanics. So in a sense, everybody who's putting strategies up on Raindex is market making. If we're talking about market making like really broadly, as I'm just putting up some offers for other people to take because they're market takers, they're taking the offers that are up, rather than like a more regulatory definition of market making, like providing spreads and managing inventory and all of this stuff, then I'd say pretty much everybody using Raindex is doing that. And then same for everybody using Uniswap or whatever, they're all market making as well. I think crypto market making is a little bit of a loaded concept. Like everyone brings their preconceptions of what that means. Like to some people, market making in crypto means illegal wash trading and market manipulation and pump and dump, and that's market making in like crypto. But then people are going to jail for that now, so that can't be what market making is really. At least not the kind that we want to be associated with. And then in TradFi, it's like something else. It's more like that's analysis of the market, like looking at the risk reward. It's more like when you go to the exchange and they've got all the rates for like the different currencies around the world, and they're giving you like a spread, and they're making sure that they've always got cash on hand and all that kind of thing. So yeah, I mean, it does actually mean lots of different things in different contexts. Honestly, that's one thing that we found. Depending on who we talk to, we seem to get a bit of a different answer on like what they're expecting.
I'm guessing, I mean, you seem to have been in the Ethereum ecosystem for a while, and I'm participating in a bigger ecosystem. It's a very different story than Flare, that we're basically like starting the market from zero, like not you and me particularly, but all together. So what lessons have you learned about this, like challenges?
In Cyclo?
In Cyclo, in Raindex, like just being part of the Flare ecosystem. Like from your unique perspective of actually creating a market, what lessons could you share with us?
I think it's probably worth Dave telling the story of like basically the origins of Raindex itself and like your early Uniswap experience, because that seems pretty fundamental.
Yeah, well, I
like the whole.
Yeah, okay. Well, I was using that's a little bit of a different question, but yeah, I was using Uniswap v1 where you had to go to the GitHub, check it out, run it, and then put some tokens up. I don't know, there was like 20 tokens up on Uniswap back then because all the tokens were like hard coded in their GitHub. It's pretty early days. And I ran it for a bit and ran into the impermanent loss issue, which people still seem not totally educated. I think there's definitely more people now that are educated on it. But the issue is that as people start to get educated on impermanent loss and all of the risks around that, they tend to stop providing liquidity. And so they leave. And then new people come in who are less educated. And it's difficult to keep that education going in the people that are actually providing liquidity. And what I mean there for people that don't know what the impermanent loss is basically when you put some tokens up in the constant product curve, and it doesn't matter what the tokens are, you put them both there, and then the price that you get when you put the tokens up, if the price moves in either direction, you're worse off than if you had just held the tokens and not put them up, which is bad, right? Because then how do you actually convince people to put the tokens into the DEX if they're mathematically guaranteed to make a loss? And so the native answer to that, like the Uniswap native answer to that, is that you have fees. So it's a little bit of hand waving, but it's basically like a spread, like you would get from normal market making. So as the market's moving back and forward, you're accruing some fees that come out of the trades that people are doing. And the idea is that if the market moves in some direction and then comes back to where you started, then you're better off than you started because you collected some fees on the way, and then everything goes back to the way that it was plus fees. So then that's a justification for why somebody would put their tokens into this system in the first place rather than hold them. And I did that with a pair on a volatile token, which was the token of the place that I was working at, actually, because they had liquidity problems on chain. They only had centralized exchanges, and actually I was receiving my paycheck in their token. And how do I get this into stables? Whenever this was, like 2017, 2018. So I did some LPing on this Uniswap thing, and I could only trade like a couple $100 at a time because of the liquidity being so low. But it was okay because ETH fees were like 1 cent back then, so it didn't really matter. And then we had a big crash, and I lost a lot of my tokens that I'd worked hard to get when the impermanent loss kicked in. And then Uniswap did their V2 and their airdrop, and they gave me a whole bunch of Uniswap tokens, and I immediately dumped them because I was like, this is a shitty system. It's never going to take off. No one's ever going to want to do this. Uniswap is terrible. I dumped all my Uniswap tokens, and that was a big mistake financially. But mechanically, not much has actually changed, honestly. Like, there is Uniswap V3, obviously, which lets you set up more sophisticated things. Like you can take concentrated positions, which lets you earn more fees, but it also makes the impermanent loss worse. So the fees are better, and the risk is also higher as well. So I wouldn't say it's a total solution to the situation. I would say that where we find ourselves is we have a thing which works really well for a certain type of token, and the constant sum, which Curve uses, is a iteration on that. Like for stable coins, we have these mathematical curves that actually work really well for a certain type of thing, which is correlated assets. So stables should be perfectly correlated with each other. So the curve works great for them, actually, because if you're LPing USDC and USDT, the chance that those things are going to wobble back and forward and end up back at the same price and you're going to make a bunch of fees is actually super high. It's pretty much free money. So those pools are always liquid, and they always have people LPing them, and the risk is like very low. And actually, it's super competitive now, and that's great. That is a legitimate DeFi success story. That's awesome. But when you have a volatile token, especially like a meme token or something that has no price, like there's no, like, price discovery doesn't really mean much for a meme coin. Like you can't do like a P to E calculation. You can't say that it's relative to the price of gold. You can't say it's anything, actually. You can say dog coins might be vaguely similar to other dog coins. Like that's about as much as you can say. So what do you pair it against on Uniswap without losing money? There isn't really anything. So then obviously people started trying to fix the problem by doing airdrops, rewards, but really what's happening there is just there's some expected amount of loss that everybody is going to expect to make when they put their money into this Uniswap thing. And then projects are just trying to inflate their token, or they've set aside some token, or there's some way that they're producing external value and then feeding it into the people that LP in the system to try to offset the losses that those people are expected to take, because everybody actually expects or even wants one of the tokens to do better than the other token, right? Like if you're minting a token, a lot of the time, the reason you're doing it, I mean, one of the reasons might just be your fundraising, but like another one of the reasons is like you might be making a protocol and you legitimately think that your protocol is going to do better than ETH. So if you think that your token is going to do better than the standard in that ecosystem, then you're basically saying, I'm mathematically guaranteeing that everybody who provides liquidity for my token in the system is going to lose money. Like that's not a good way to phrase it to get people to participate. So instead they say, what we're going to do is airdrop you rewards, right? And that's you'll be up at the end of the year. And the issue is you're just moving the cost somewhere else. So the cost didn't disappear. The cost just moved to whoever is now paying for those rewards. And if the person paying for those rewards is the project, then you've basically put the cost back on the token. And it ends up being like really circular and complicated. And it's actually really difficult to talk about the real cost and benefits of all of these things, because I don't think many people actually go that deep on it. Oh, to be honest, like they don't do it mathematically. I think high level people generally get this, but I don't know how many projects are sitting there being like, this is mathematically how many rewards we need in order to offset exactly this much price appreciation that we're projecting over the next 5 years. Like, I just don't think that's happening. I think people are just sort of throwing rewards around and they see nice big numbers like, oh, 100% APY over there, 20% APY here, 2000% APY down the street. And people just sort of like jump into these things. So it's a bit of a long way of going around it, but like, this is sort of where I got to Cyclo actually, is like, if we want to actually have these liquidity positions work on Uniswap or any other system which is going to be algorithmically trading the tokens, it doesn't have to be constant product, but if you want to algorithmically trade tokens at all, which is what Raindex does as well, in a more expressive form than a constant product, then we actually need to be able to say something about the way that we expect the price to behave. And for Cyclo, the thing that we can say is it's going to trade somewhere between $0 and $1, right? So that's more than you can say about SHIB or something else. Like there is actually a range. So the idea there is like, if there's something that we can say, and we can also probably say that statistically, you could look at some data and you could measure some data, and within 0 and 1, there's probably a smaller range that 80-90% of the time the price is going to sit between. And we were actually talking about this a little bit earlier before we jumped on the recording. But right now, everybody disagrees a little bit on what the range like will be. But as things play out, we can measure it, and the more that we measure it, it'll become probably a self-reinforcing thing where everyone's going to be looking at the same charts, and people can start getting the same idea of what low is and what high is, and then they're going to start reinforcing those things, and then that's when the actual market psychology is going to play out and further constrain this particular tokenomics into a band. And then where we are in that range becomes a proxy for demand on how much people want leverage on the underlying token, and then it actually becomes something that people can much more easily LP, because then you can just go to SparkDex in this case, and you can click on LP. You can pick a stable, which is the range that the side token is ranging against, and then you can pick the tighter range on the concentrated liquidity, and you're going to collect more fees, and it's going to sit in that range, and maybe sometimes it'll leave, but it leaving doesn't mean you're totally repped and you're never going to get your money back. It leaving means like, okay, maybe I miss out on fees for like a few weeks or a few months, and it's going to come back and everything's fine.
I love the shit y'all build. I mean, we got to work on the UI a little bit, but I love the shit y'all build, man.
Yeah, Steven is your biggest fan, dude. Like we're talking about, I don't know, fantasy book. It's like, yeah, but Cyclo, it's amazing.
Yeah, I reckon people tend to push things further than they should, as like human nature, which is why we keep seeing so many liquidations on all these platforms. And so I reckon it might go a little lower, but probably not like crazy much lower than that. It's I think it is like, because it's not exactly the same thing. It's obviously like a different platform, but people are obviously going to be comparing to other platforms like Kinetic, like Aave, like Maker, like whatever else is out there, and they're just going to pull up DeFi Llama or whatever, and they're just going to be like looking at rates. And to me, it makes sense that like right now the rates for borrowing stables are really good on these platforms actually. So it's kind of competitive actually, because the market's already just had a big dump. So probably a lot of people are thinking it's not going to go that much lower. So it's probably actually pretty safe to like lever up a bit if I wanted to. And it's also really cheap debt at the same time. So things are pretty competitive right now. But then when things are going crazy and it's like 20-30% to borrow stables, and then all of a sudden it's like, oh, that is, do I really want to be borrowing my stables right now? Like that's actually pretty intense. Like if you borrowed like 100K, you're paying like $20,000 a year just for the right to use Aave. That's too much. So I reckon I'm keen to just see what happens. Like for me, this is all like, it is a product in a sense, but it's also kind of like a bit of an experiment. It's a bit of this like economic, experimental, like, let's see what happens. Let's collect data. And then over time, as we get more data, then we can suggest more things. Because I know in chat, like in the Cyclo chat, people are like, oh, we could do this, we could do that. And I'm just like, yeah, but like these things take time to play out. Like the market takes time to build. Like you can't really rush it. Like you don't have the data. We don't know the numbers. We don't know how it's going to behave in different markets. There's no way to speed that up until you actually have like probably multiple years, maybe even like multiple cycles worth of data. Like you don't really know, right?
Right.
So that level of hopefully safety, I'm a little bit wary of things saying like things are safe, like in DeFi. It's not safe, but it maybe safer. Like
it's the best form now possible.
It's my best attempt.
Right.
I'm some guy on the internet. Like I had a crack. Like it's my best attempt. Yeah.
I think it's the funniest one or comment I heard is like, capitalism is the worst form, or democracy is the worst form of government except for all the others. Right.
Something
So this the new best form, or the new worst form except for all the others. How people do look at them, because it's like I said, I mean, I see the value in them, and nobody's using them to what I would think the value would be, or the way that that somebody could really make some good money off of them, I'd say.
Well, that's an inefficient market, and that means that you should do that and make the money. That's for you. I want everybody using Cyclo to make money. So you go make the money and then tell me, and you'll make my day. Honestly,
I have been making money. I'm super excited.
You made my day. You told me before, and I was like, "That's sweet."
well, here's the funny thing, right? So, we just posted this video about it yesterday. Day
Did
before.
you guys watch that video? The latest we made?
No way. Did you put in the Cyclo? In the
No.
Cyclo?
No, we put it on our X page.
I'll share it with you guys.
Yeah, you should. If you make something
I mean-
about Cyclo, definitely post it in the group so we and everybody can see it.
The thing we found most
I will post that
interesting
too.
is the number of, because we were sleuthing the wallets, and the number of people who have still wrapped S Flare. So the thing is size S Flare, the name is tricky, guys. Y'all are killing me.
Yeah.
Is that there's $400,000 locked up in S Flare, but there's only $400 in liquidity. So the moment S Flare goes up in price or value, let's say it doubles, some of those people are going to want to unwind to get that double out.
Yep.
So the immediate thing is anybody who holds 20 cents is going to go up to 50 cents. I'm guessing a number, how much somebody needs to buy up to unlock what they want to buy up. So we're kind of watching that and buying some of those up, and then watching comparing the launch of S-Flare versus wrapped ETH, and kind of seeing the similar dynamics. So like for me, like I set up a LP pool that is not active yet, but and it's 100% USDC. But as the price goes down, I'll be swapping my USDC for ETH Flare tokens, so that when it gets below 50 cents, I'll start having money that I can then cash out to unwrap, which I wrapped up. It's looped at 70 cents.
This is basically how it's supposed to work. And when people are in chat saying there's absolutely no reason to buy Psy tokens, what you just said,
they just don't know.
Yeah, but like, what are we going to do? Like, say all of that in chat every time somebody says something, or just like roll things out and then people can actually see it, and then we can actually have the data and point to the data rather than just like talk about something really abstract. But yeah, you're absolutely right.
Our video does. Like, I point out in the video, like, here's why. I mean, if you look at ETH's drop, almost every single drop on the size ETH token is me looping like $120 down to where I'm like, all right, the impermanent loss is a little bit too much. I'll wait. But I know in my mind, when I unwrap it 30 or 40 cents, when the R-Flare tokens or whatever changes, and people go, okay, we're going to do this because they're chasing the R-Flare rewards and not the token. I'll be set up to go, okay, well, when it comes down 20 cents, I've bought all the way down and in a good position to unwrap everything I wrapped earlier.
Yeah. Or if ETH like doubles.
Yeah, well, or if ETH doubles, I wrapped up at 1800. So my first wrap anyway. So it's
like ETH locked up, yeah. And
so
also,
for example, go ahead.
Oh no, I was gonna say, and also that the site has a max price. It actually has a cap. I mean, not that it's unlikely to get there, because if it starts getting anywhere close to $1, people will start minting again.
For real, I was $1 1 for one. That doesn't last long. I mean, it's not.
Yeah, it doesn't.
I managed to dump some ETH at the 0.88, so that was pretty close.
That's really good.
That's really good. Yeah.
Yeah. No, mine's all been right the 70 to 80 range, and then I've done some at the 60s. But yeah,
just still really good.
It's kind of like, when there's like a short squeeze when everybody's going short, and then you like buy it, and then they all have to like suddenly buy back their shorts, and then it like goes up. It's kind of like a long squeeze. It's like everybody leveraged, and then when things go long, actually no, it is actually more like a short squeeze. Yeah, it's pretty much like that exact thing. Like at some point, everyone's going to want to buy things back, and then that's when the token price is going to pump, and then that's when you sell it back to them. Really, that's exactly right.
And if you set the LP pools up, you can buy and sell depending on what you're trying to go with when you set it up certain ways on the expert level, to kind of, instead of going in at 50-50, going, okay, I want to buy up this on the way down, so I'm going to be super one way versus the other, and as it's going down, it's leveraging itself out, and then you're all the way converted to CY ETH at 20 cents. I mean, that's where I look to convert fully to. And then I'll just pull it all out and unwrap.
Yeah, you just have to actually be patient.
Yeah,
that's the thing, and like also have conviction as well. And maybe this leads into because we're talking about liquidity a lot on the SparkDex thing, but maybe we could talk a little bit about the liquidity on the Raindex side as well, because that is still liquidity. Like there is still tokens sitting in Rain. Like I put an ETH in and minted like 2,000 Psy worth this morning and dumped it in Raindex this morning. So there's like another 2,000 chugging away there. So that's real liquidity. But basically well, Josh mostly, actually more than me, is working on the headless version of Raindex, so we can embed it directly in the Cyclo front end with simplified and dedicated strats that can do like a dollar cost averaging type thing that track the market with a baseline where you can say, well, you can't go past this point. And then what you could basically do is automate what you just said by setting your buy and sell points ahead of time. And then as the market's moving like this, whenever it goes past those buy and sell points, it'll start triggering options as aggressively as you want. And then anytime it's selling the Psy token into stables, it's setting those stables aside relative to buy, ready to buy when the price comes back down. And then it'll accumulate the Psy tokens again. And then also it's basically just like ping-ponging back and forward and automating that whole process. And basically then, like that is liquidity too. Everybody who sets those rotations up is just providing a large spread. And instead of being the people that are providing the liquidity on SparkDex inside the range, they're the people that when it leaves that range, they push it back into the range. So they're sort of the ones that are actually constraining everything back. So it's like a symbiotic thing. So now everyone's like, oh, I can't put tokens in the LP pool because we've left the range that's a sensible range, and I'm just going to get lots of impermanent loss as soon as I add to the LP position. And then I would say to those people, well, take the tokens that you wanted to do that with, or somebody else will do this, and then they can set up something that's actually actively pushing the price down with the intent to also push the price back up again later. And they set the range. They don't set the range. They actually provide the mechanism.
They make money off the mechanisms providing the safety guards or or guardrails.
Yeah, so we'll have Spark handling sort of like the crowd in between, and then Rain like bringing things in, and both of those systems are liquidity. So when you say like, how are we going to get liquidity? There's two different types of liquidity that have completely different mechanics and completely different goals, and they need to work together. But the issue is that one of them has a very difficult UX, and that's what we're working on, is like streamlining the whole process, so that then this one that pushes things in will just be like an option in the front end. And maybe actually, Josh, you can talk a bit about like where that's at, because you've been working on that like a fair bit, and the front end as well. Like Josh has been working on like the whole front end. I just did the contracts, but
yeah, we've got the new version of Raindex up, and that actually uses our
V2's up?
Yeah, V2 of Raindex is up. Have you seen it?
Well, I was playing with it, but I couldn't use it because every time I went to, I did the wallet connect, but it wouldn't register my wallet connect. So I haven't tried it since. That was what, probably a week or two ago. How long ago was that, Will?
Yeah, no, more like when you guys just deployed, and then we haven't tried with the Rabbit wallet that we set up for the tipjar, but yeah, I had issues as well trying to use it from my Bifrost.
Yeah.
Okay. Well, hopefully see how Rabbit goes. I mean, yeah, it's probably a wallet connect issue, not something we can actually fix. But try again. You mean the like v2.raindex.finance, right?
Yeah.
Yes. Really nice new layout. Really cool. Yeah. Oh yeah.
Yeah. So our whole push with that was basically to create a new front end, but also do a lot more work under the hood so that the front end is doing very little, so that other people can build front ends for Raindex. So like we've got like a .rain file format, and you can put a strategy and all the configuration for that strat into a single file. And then the idea is that if you want to build like a dedicated front end for Raindex for your token, so you just want to offer a few strategies like with Cyclo, you can, with a single file format, a .rain file, you can load that into our SDK, and in like a few lines of code, basically build a front end for Raindex. And we're going to do that for Cyclo. So like Dave said, you'll be able to, I'll probably make it part of the flow for like after you mint. So you lock some WETH, you get some PsyWETH, it'll be like success. Now would you like to sell that PsyWETH? And you can click over to the, I don't know what we'll call it, maybe like the trade tab of the Cyclo site, and you'll be able to see your Psy token balances, and just like Dave said, like put in like the daily budget, like the amount you want to sell per day, and the lowest price that you want to sell at. Probably just put in those two things, I think would be really good. That's super simple. Hit deploy, and then it will use Raindex under the hood to start selling the token for you.
Yeah, that would be amazing. That would be incredible to have like that simplicity. That would be super nice.
Yeah, and then anyone who says it's too hard to exit a large position because there's no liquidity, well, hopefully people don't even say that, because the minute they mint their tokens, they get directed somewhere where they can get a lot of control over how they sell, actually even more control. And they might get better prices, because that's the lowest price that you'll get for selling. But if the price goes up, you'll get the better prices too, depending on how you spread out your trade. Like
so, for example, on S-Flare, on Size Flare, I am the last line of defense, and I have liquidity from 33 cents to 23, I think. And it's been interesting that below that there's really not much liquidity, so there's not much trades. And then the price has moved with the price of Flare, as we have seen that when there's not enough trades, then the prices shift. So is there any way that I could exit Spartex and then add those funds to Raindex, and then like would that be a more efficient way to have that liquidity there? Or
yeah, you could set up a buy strat under those levels. Right now it would just be buying any. You want to buy, I mean, I assume you want to buy those levels, you don't want to sell at those levels. You want to put some stables in and buy up, provide buy-side liquidity at really low prices.
Yeah, I mean, that's the thing, that there was not enough liquidity, so I decided that it would be better to get fees along the way, as opposed to just buying the whole tokens and then dropping the price and losing a lot in like the price impact. So, but right now, like I'm thinking more like, how can I support? Because I did buy a lot of size tokens when the price went down, but if I remove it, then the last line of defense is going to be 33 cents. So I'm like, how can I still contribute to the overall project? Like, how can I still contribute to Cyclo?
Yeah,
independently of just thinking about my own benefit.
Well, I would ideally, nobody has to do that actually. Ideally, Cyclo is set up so that if everybody's trying to make money, that is what makes Cyclo better. And if people are struggling to do something that they think is possible, but they're finding that difficult, and then that's like a barrier to entry, I'd probably prefer to focus on removing the barrier to entry rather than have people do really awkward things that they wouldn't have otherwise done, to sort of like kind of like a hacky workaround, to use like a dev type way of looking at it. But I think what you're saying, like you're kind of pointing to what I was saying before, which is like Uniswap style dexes. They don't actually push in any direction. Like they don't make trades happen. They just, any price that is currently the price, they're okay with. They're equally fine with every single price. So if the price happens to move out of their range, they just sit there and they don't care, and they don't ever try to do anything to bring it back. They're always waiting on somebody else to bring it back. But then, like you said, if you're in a super low liquidity range, it's actually really difficult for humans to come in and sensibly get their heads around swapping into that, because they're going to say, oh, this is a huge price impact. They're going to be looking at the psychology of it and being like, oh, I can't make my trade. But it's like, it's not a real price anyway. Like if you're way up at like 85, 90 cents, or you're way down at like 10, 20 cents, or like you're super far from like where the range has been for a really long time and the liquidity's gotten really low, it's not that is a price that is a real price, and in taking it and you get a lot of slippage, you're like hurting yourself. It's actually like, that's not a real price. It's just an artifact of the way that Uniswap style pools work, and I just happen to get like a little bit outside where it's comfortable, just waiting to be nudged back in to the real range, and then all this extra liquidity that's just sitting there in the concentrated range will suddenly kick in again. But literally, like, I don't know how many people watching this have ever actually set up a concentrated liquidity range. But when you go to expert mode and you like click the ranges, and then it's like in range, as soon as the price moves out of that, you could have put $50,000, $100,000 in there. As soon as the price moves out of that range, none of that liquidity is like available for people to trade against. So it could go 1 cent out of the range, and then all of a sudden you have like no liquidity in the pool, but it's just literally waiting there for someone to nudge it back in, and then it can start trading again with all that liquidity that's sitting there ready to go. And that's like, people make products for this. Like there are products that sort of manage the pools to constantly move the concentrated liquidity around to sort of try to mitigate this problem. And I think we should actually get better at that. And that's, I think, why we want to set up the steer stuff. That's the risk mitigation, and like we want to get that working better as well. But just to repeat myself from before, Rain is the opposite. Rain does have an opinion, and you set the limit to how far you want to push, and it will push. It will use all the available funds that you have to actually push the price back to your limit. And if lots of people are doing that, they're all pushing. So then what happens there is that Rain is an algorithm, and the trades are done by machines. They're not done by humans. They're done by solver bots that calculate. They check routes, they check slippage, they check all the calculations. If your trade is this big and that would be too much slippage, but then a trade this size would actually be fine with the right amount of slippage and still get you the best price, it'll place the smaller trade for you automatically. Like it does all of that stuff. So you just set it up, and then whenever the market moves into these low density zones where it's really difficult for people to actually make sense of, the robots just take over. Basically, that's the plan anyway.
So I got to jump off here, guys. I got another call here in like 3 minutes. So I look forward to hearing the rest of this. And yeah, like Whale said, I am a big fan of what you guys have built. I just, man, I can't wait for other people to finally start using it, because then it's really going to do what it's supposed to do. So just wanted to say that, and look forward to playing with that V2, and I'll reach out if I can't get connected. So
that's right, from the other wallet that we set up. Let's get together and make a video on that soon.
Yeah, we'll make another video with it. It'll be fun. So
cool.
Yeah,
thanks, guys. See you.
Thank you.
Yeah.
Yeah, I mean, one thing I like about this space is that it's easy to surround yourself by way smarter people than me, and like I appreciate you guys taking the time to explain this, because yeah, it's very complex, and it's things that are not usually talked about. You know, like you see all this DeFi content, it's just like, oh, just give supply liquidity, but there's so much more to consider behind the scenes on what's happening. You were talking about the impermanent loss of SFLR and Raffler, and that's why there has to be forever incentives with the impermanent loss.
Technically, I was just saying that the impermanent loss would be higher than the fees on that particular pool. So let's fast forward to like after all the inflation sort of like runs out a bit, because Flare actually is doing like the bootstrap phase now, and then we all know that it's going to go down a lot, like the inflation. Mm-hmm. Right, yeah. So let's sort of fast forward to that bit. Then I think you're saying the inflation is about 6% after that.
4 or 5%. I'm not sure. Actually, Hugo said that earlier in the call, that I think after January 2026, when the flare drops go down, you would only get, I think it's like 3.3 or 0.4 monthly on the delegation or staking reward, something along that. So yeah, like 5%. Yes.
Okay, let's just round to 5. It's a nice easy number. So 5% per year would, the S-Flare and Rat Flare is a good example, because those are really correlated assets. and every liquid staking token is basically the same in this regard. They all have the same thing. Like even Lido, like the staked ETH, whatever you call it, they've been airdropping governance tokens to people to deal with this for a long time. But if it's 5%, that's not that much impermanent loss actually over the year. But the question is still whether it's worth it, because you're still not going to do something that you make a loss on. So the question is just, are the fees that I expect over the year more than the impermanent loss actually? And the issue I'm saying now is just that particular pool, when you look at the size of the pool versus the daily volume versus the percentage fee on the pool, because I think they've got it set on 0.01, like the smallest possible setting on Spark. Yeah. It only works out to like 0.2% fees over the year when we looked at it the other day. So 0.2% was just way too, like 0.2% is not going to cover actually it might, like, because 5% doesn't mean that you get 5% of impermanent loss. You get a much smaller number. Like it's something like if the token doubles relatively, then you lose, I can't remember if it's like 10 or 20%. But then if it's in a concentrated range, those numbers go back up again. So it's complicated, right? Like if you're doing concentrated, all I'm saying is like if you're doing concentrated liquidity and you're setting the fee on the smallest possible setting, that might be unsustainable. So what might have to happen is maybe the pool gets smaller, so there's less competition because the fees get split between everybody in the pool, right? So maybe the pool gets a bit smaller, maybe the fee percentage gets knocked up a bit, maybe people don't do like such a concentrated range, and maybe all of those things happen, and then the fees suddenly do justify the impermanent loss. But that will also manifest as a worse experience and less liquidity for traders. So it wasn't that I was saying that pool is just unsustainable full stop. I was saying maybe a lot of the liquidity and the super efficient trades that you can do in this pool are sort of being subsidized, and at some point in the future you'll still be able to go back and forth between the two. It might just be a big spread.
Yeah.
Yeah.
So yeah, it's an interesting thing, the whole idea of bootstrapping liquidity, because without those incentives, like nobody would join. But I would actually love to see the spreadsheet of how Spartex calculates the rewards, similar to what you guys are doing. Because I don't know if the percentage that they're offering, it's exactly what you get. Like it's hard to tell. But
well, sorry, yeah, it's a very short time span. I think that's what we figured out the other day on the chat, right? It's just only like the last day or something. So if you look at it on a good day, it looks amazing, and if you look at it on a bad day, you're like, why would anybody ever do this? So it's just, you need to like zoom out a bit, right?
Oh, you mean the rewards calculations, right?
Yeah. If you go to Spartex, I'll do it right now.
Oh, you mean the they show predicted rewards, but they only use the last day of data.
Yeah, so if I go to analytics right now and I just go to
do you want to share your screen?
If it's working.
Is that an alpha based return or a fees return?
I'll share my screen and I'll show you what I'm talking about. Hang on.
Also, by the way, not only the spreadsheet is available, but all the code for generating the spreadsheet is also open source. Anyone can actually run it and verify if they want.
Our spreadsheet?
Yeah. Our rewards, the process. The actual script that does the calculations that I wrote is also public.
Yeah, the tokens page is not loading, so you have to go to the pools. For some reason, they're probably updating something.
Yeah, it's bugged out or something. Okay. Okay, well, what I actually wanted to show was like when they say these APRs here, like some of them are really high. Like these are good APRs, but when you, look, we're like third. That's cool. So, okay, so this is a great example of exactly what I was talking about. This APR, it breaks down into almost 70% is SparkDex fee. So that SparkDex fee is the fee that sustainably offsets impermanent loss. Yeah.
Yeah. The problem is that that's not always sustainable.
Well, this is
right now with this volume is not.
Right.
Say again.
Oh, this is only based on 1 day of data. That's the thing. Like we've got 24 hours of volume here. Oh, this is also a tiny pool. This is super small. I'm looking at a $100 pool, so that's really easy to get a high APR. I just sorted by APR. So of course all the tiny pools are going to pop to the top. But sorry, what were you saying? It's not sustainable.
Yeah, no, exactly what you're saying. That it's not real. Like you see that fee and you're like, of course, and then you get in there, and then the next week there's no activity, and then the APR or the fee goes down considerably.
Yeah, it's so it's not that it's wrong. It's just that some days, yeah, it's okay. These fees though, these are actually consistent, right? So
Yes.
the rewards they're getting paid out according to however each project is doing their R-Flare rewards or whatever. Or it's like, anyway, all these rewards, because they're just being calculated by the projects, those are generally accurate because they don't really change. Like if it's going to be this percent APY, it's not going to change that much day to day. So those ones are accurate, but the trading fees vary wildly. I think the issue here is that, so here's a pool with a ton of volume. Yeah, here we go. R-Flare rewards, Flare drop, delegation, Spark Dex, and this one's got, this is USDC and wrap Flare, so of course it has lots of volume. So this one's actually pretty good. This one looks pretty sustainable, but the fees on that one, the fees only 1% there, and the Flare rewards are 33%. So if that's actually indicative and the fee is usually 1%, I guess it doesn't really matter if they snapshot it daily or weekly or monthly. It's just always kind of not a significant portion of the total rewards. But for Cyclo, there's no other rewards really, unless you've got some rewards from the other token in the pair. So that Spark Dex fee is basically 100% of the rewards. So having it be inaccurate is really bad for us.
Yeah.
Right?
So even that, for example, that's a good pool. That 33%, that's RFLR rewards.
It's mostly rewards. Yeah, it's not actually fee.
So I wonder how they managed to get that percentage to actually represent what the amount of money that you have in the pool. And that's kind of what I was saying about, instead of having 1 million reward flares for S flare holder or size flare holders, and then depending on your holdings, then that gets rewarded. If there was a way to do incentives by percentage, and then it's fixed, and it doesn't mean that you're using the 100% of your allocation of reward flare. Because here it's not like, I don't understand how they managed to get this 33%. But if there was a way, and then you answered why you thought that it wasn't a good call. But like I was wondering if there was a way to have a fixed percentage, like 10% of R-Flare rewards that go back to the liquidity providers or the size tokens. Like, yeah.
Well, you mean the conversation we're having the other day in chat? Yeah, my main concern there was like not necessarily that it can't be done. It was just the conversation I thought was being a bit flippant. It was like, oh, it would be so easy, we just add the rewards. And I was like, that's not an analysis, right? Like it's just you, and also it's not really an actual solution. It's just, well, Flare giving out these rewards to people, so let's just go and ask Flare for even more rewards. Like that'll solve everything. Like I just don't think that's a good attitude. If it was more like, not a good attitude, I don't think it's a good argument. I don't think it's a solid, like, we analyzed the pools, we got the data, we figured out that this is how much impermanent loss people would incur based on the data we have, and this is how much the fees are, and they're clearly not enough. And if we added enough rewards that the fees were twice as big or 50% bigger, or I don't know, some actual number, and then there was some math behind it, then I could look at that and be like, okay, well, I actually feel comfortable writing this up and proposing this to Flare.
Yeah.
Because someone has to actually make a document and go to the Flare rewards committee and actually explain something to them. And if it's just like, I don't know, the vibe is that we want a bunch of extra tokens, like it's not the same as an actual logical argument. Do you know what I mean? And this is the exact analysis that I was saying at the start of the call people aren't really doing, but I don't actually think it's not that difficult, actually. To make, you could make probably like a lot of simplifying assumptions and you could get the data. I'm just saying that I'm not going to do that analysis, but if somebody else did the analysis and they made like a really strong argument for it, then maybe we could have a conversation about it. But right now, if we look at the Psy tokens, let's look at this one. This is Psy worth in USDC, right? So this is a Psy token against stablecoins. So this is exactly the pair that we said, if you LP on this while this is in a reasonable range, not the current range, in a reasonable range, then you won't actually get much impermanent loss at all. Or even if you get impermanent loss, it is actually true to the name in that it is impermanent. And at some point, it should come back to roughly where you started again. Like, for example, I put a bunch of Psy worth in the LP pool, I think around 40 cents. And then we spiked up to about 65 cents. And I'm pretty comfortable at some point it'll come back down to like 40 cents again. And at that point, I can reassess whether I want to keep LPing or I want to pull my LP position. and take the profit. So a 17% APY on that, that's actually really good, even though this is a bit of a slow day.
Can you open that pool? Can you like click on that and then go to fees? Yeah. So what's the peak? Like what's the amount of fees in the peaks?
Well, that's even more. So if I'm saying this fee is good on a bad day, this fee is even better, right?
Correct.
Yeah. So I don't see a strong argument as to why this pool should get a lot of R-flare just looking at this.
Yeah. No, I mean, so I'm in the size flare CUSDX pool, and in the past 15 days I made $1.5 in fees, and I have like $700 or $600 liquidity there. But we were out of range for a while. Like if you go to the, let me share this with you.
Yeah, I mean, being out of range is being out of range. Like that's,
yeah, totally. That's what I mean. So
yeah, that can't be a factor in whether we pay people R-flare.
Totally. No, all I'm trying to say is that but in that pool I made maybe like $35, $40, and as of right now my impermanent loss is $60.
Yeah, but what is your impermanent loss?
I
Like,
enter
yeah,
so my range is 24 to 34 cents on the size flare CUSDX pool, and right now we're at 25.
Yeah, when did you enter? Like, what do you remember where you entered your position?
32, 33, around there cents.
32.
So that was like a month ago, right before you changed our reward flare in the structure for size week.
Okay, so maybe we did that to you accidentally. I mean, we knew it was going
No, I did it because I knew that was going to happen. Like that's why I entered, because I wanted to buy, but because there was no liquidity, I decided that between the fees plus the numbers that I would be okay, because like if there's no liquidity, I couldn't buy 3,000 size flare if there's no liquidity. Like that wouldn't be sustainable. So I'm happy with this decision. Like I don't mind, and I did it on purpose. And if we keep ranging in this for a little bit more, then I'll completely manage my impermanent loss, and then I won. So like I'm not complaining. I'm just saying that yeah, I'm 85% of the pool right now.
Yeah, and I guess what I'm saying is like I'm trying to map your personal experience and think, is what you're saying reasonable in terms of like if somebody else did something similar to you, could they reasonably expect to reproduce what you did? And I would say yes. I would say they could look at our Telegram, look at our Twitter, be broadly aware of what's upcoming because we always announce things. They could look at the data for the prices. They could set up their range. They could enter at a point that seems like even if the price deviates, it'll eventually come back to their original price or get close. And I feel like based on what you said, somebody else could replicate what you did. So if people can already replicate what you did, and they have a good chance of being profitable if they use their brain and manage risk, and of course there's a chance that they don't, but like there's a pretty good chance that they do, and the system's already paying them really well compared to like, what else are you going to do with your stables? Like you're going to go buy real estate and get like 5 to 10% per year. Okay, well you're getting like 15, 20% plus per year here on stables. Like, why do we need to add R-flare to all of this? I just don't understand like what the justification is for adding an economic incentive. I 100% understand the justification for better education, highlighting that this is actually a thing that you can do, making the UI better, explaining to people what the fees are in a way that doesn't change every 5 seconds because the analytics page only gives you 24 hours of fees. Like I can see justifications for all of these reasons why people might not already be doing this, that are all obstacles in the way, that there's so many obstacles that not many people make it through all of the obstacles. But I'm not seeing in this a real burning argument as to why we need an economic reason to make people go and do this. Do you know what I'm saying?
Yeah, no, I agree. I mean, that's why I stopped arguing with you, because like the other guy that was saying, he was just like being stubborn and like he was trying to make a point. And then when you said what you just said, I was just like, yeah, that's fair enough. And like, there's no need to keep arguing about the same thing if I don't have a better argument against what David is saying.
Well, we are talking about it on this call, so I thought we'd just go over all of the data here. This is good to actually look at the charts. It's good to talk about it. And honestly, like if we do all of the things that we can think to educate and make the tools better and make things easier.
Because I mean, man, from talking to people, like I've realized how green most people are. Like most people are not even using S-flare, like the liquid staking, which is kind of like the most basic protocol on DeFi. Like most people are still afraid of that. They don't even know what that is. So at some point, asking them to like go into analytics and understanding what they're seeing, I know that it's not your job to figure it out for them either, but it is a barrier. Like all of these things are just barriers of entry. And I think the purpose of this discussion is how can we lower those barriers of entry so more people can explore and learn.
Yeah, it's a chicken and egg problem, right? Because we know that at scale, the ecosystem will figure itself out. Like the incentives are clearly there. That's your point, Dave. That everything's there. But clearly we're not at a catalyst point. Like the Flare DeFi ecosystem isn't large or sophisticated enough that there's enough people that understand the incentives and take the clear opportunity. And probably the high liquidity pools are being professionally market made at the moment.
Yeah, I think there's probably a little bit of inorganic stuff going along. Just when I've looked at SparkDex, I'm not saying that in a bad way. I just think that they probably have engaged some people just to make sure that there is a ton of liquidity for the big brand names like ETH and Flare and USDC or whatever.
Right, exactly. Yeah. So then the question is like, is it our responsibility to try to upskill the Flare community as it is to make something that should work, or is it even possible to do it? Like, is it worth us trying to like teach people, or is it just a wait it out problem?
I think that's where Steven and me come in. Like we having these conversations with you and me upgrading my knowledge base then allows me to share, and then everybody can stick to the lane. I mean, that's where I see what Steven and me are doing. It's like, I know that you guys might be constricted by non-financial advice, like not giving financial advice. I know that the guys at Kinetic, they're very keen on not giving any advice.
Of course.
But then if I learn and understand, I don't have that limitation. So I can go and share that knowledge in the purpose of everybody learning, because if nobody knows how to use this, then I am not benefited by that. So like,
sure. You guys are definitely doing God's work. But like it is true that in some of the other ecosystems in the Ethereum universe, there's plenty of sophisticated people out there that have the funds to take advantage of these kinds of opportunities.
Yeah.
Yes, it's awesome that you're educating people. I'm just wondering if it's like more of a systemic thing where at some point the Flare ecosystems will get big enough that they're just the numbers. Like there's always some percentage of an ecosystem that's going to have the ability and the funds to do this kind of stuff at scale. Whether at some point we'll just get to a level where there's enough of those people that pull up this and go, hey, there's a great opportunity here, and they just dump loads of liquidity and take advantage, and it kicks everything off.
Well, actually, we do have some people in chat. I don't know how much of it is true, but we have actually kind of the opposite problem, which is that we have some people saying like, I have a whole bunch of money that I can't actually deploy because of they just expect to be able to do whatever they want in a single trade. And we can disagree or agree with whether that's actually a reasonable expectation, given everything that we just said about the complexities and risks that LPs are taking on SparkDex. But that is the reality of what people expect. And actually, if you go to this, our SciWeth June page, that happened. Look, someone came in here and they're like, cool, I'm going to mint $40,000 of SciWeth. And then obviously they went to trade it and they're like, oh shit, I can't mint $40,000 in a single trade. And so then they came back and burnt $40,000 of SciWeth. So we can look at the data and we can actually see this play out in the data where there are people coming in here who have money, they're just struggling to actually deploy it. And that's why when I look at the data and when I think about what people are doing here, I don't know that we need anything other than a way for these people to meaningfully engage with the product, because how do they?
Yeah, the question is like, even if we had the easy DCA strat and we had all the educational content, whether this person who tried to mint 40,000 would even be aware of it, / understand it, / be willing to put $40,000 in it.
They'd be much more likely to if we do what you said earlier, which sounded like a really good idea, which as soon as when you mint something, there's a pop-up and it says, hey, here's a really easy way that you can offload your 40,000 freshly minted SciWeth tokens, and then they click a few buttons and then they like do a few things and it's foolproof enough that they're not going to lose their money.
Realistically, there's no silver bullet. It's a combination of things. It's going to be like stuff like this. It's going to be the educational content that you guys make. It's going to be the growth of the Flare DeFi ecosystem overall. It's going to be just going to be a bunch of stuff. At some point, we'll tip over some catalyst point and it'll take off, and all the incentives will work as they're supposed to.
Yep, that's the plan.
Yeah, one of the things that I've noticed is that I logged like 100,000 S-Flare at 0.035, so that was like almost double the price. And now, even though the price of size Flare is much lower, the amount of capital that I need and the amount of capital that I'm unlocking, it kind of doesn't make sense right now. So that's also part of what everything is just stopped, because like,
it's actually supposed to work this way. Like, it's not, it's in the name, it's Cyclo. It's not supposed to be called upload. It's called Cyclo. Like, it is actually supposed to contract. sometimes based on broader market conditions. And then when things turn around, it's supposed to expand again. So it's inconvenient, I guess, that we're trying to, it's like an early bootstrap phase. So ideally it would be nice if right now it was just like grow. We're just like doing rewards, like everything's like getting bigger and bigger and bigger. But when the market drops like 60% or whatever it is in like a few weeks, like what can you do? That is headwinds, right?
Totally.
I don't want to be the guy where somebody comes to chat and it's like, your token sucks, and they're like, yeah, well, the whole market sucks. Like, I think that's a real cop out. But at the same time, it literally mathematically doesn't make sense necessarily to unlock for a lot of people, like you said. And at some point in the future, assuming that things recover, it mathematically will make sense to unlock. So I think we actually have a better argument than just like, yeah, well, the whole market's down, man. Like it does. There's some rationale there, I think.
Yeah, totally. All right, guys, is there anything else you want to say? I mean, there's a lot of information. I definitely need to watch this again and then chop it up into nice, like I try to keep my videos shorter than 1 hour to keep it on point. It's already like a lot to sit down and listen to information. But is there anything else you guys want to share about what you're doing?
I think so. We're just like grinding through at the moment. We're trying to make improvements to using Raindex strats. Using them in Cyclo being a good example, but also we want to make it easier on the Raindex V2 Raindex site. Also make V2 the main Raindex app instead of on V2 domain. I know there's like so much. We're working on so much stuff. It's hard to even keep track of what's going on.
Totally.
I don't know if you have any major things you're excited about, Dave.
Maybe the opposite of that. Actually, maybe the thing I'm less excited about is we not that long ago, like a few weeks ago, we were like, oh yeah, we're going to do like a Sci Jewel token and we're going to do like a Sci Fleur ETH token and stuff. But I think given we changed the way that the rewards work to be really, really sensitive to the size of tokens. So while a token is smaller, it gets a lot more of the rewards, because basically what we found is that when it was just equal, people would just mint more and more of the thing that had the most liquidity. And so it just meant that the size flare token just kept getting bigger and bigger and bigger, and the ETH one was just kind of sitting there. So I'm much less excited about making that even more chaotic for people and launching additional Sci tokens until we see the supply start to balance out a little bit and we get a little bit more critical mass. So yeah, that's the opposite of announcement, isn't it? It's like an unannouncement. But I think it's important to just sort of like put it out there as well if people were expecting more tokens to ape into. But I also don't think it really causes any problems either. Like the Sci Fleur ETH token you would assume be almost identical to the Sci WETH token anyway. So I can't see anybody getting that worked up over having one but not the other.
Yeah, and there's much less liquidity in that pool. In that, like Kinetic, you can only borrow, I think, 35 Flare ETH. Because there's not enough paths of liquidity to actually be able to liquidate. So, yeah, I mean, that's a weird protocol. I don't understand it. Like I've used it, and I've arbitraged that wrapped ETH, Flare ETH pool a lot. But like the dinero, I don't know what you can do with that. And then the price doesn't seem to be changing at all. So I don't know. That project is kind of unclear.
Black box.
They are one of the top tokens on SparkDex in speaking well of them. So I've just been pretty, the token page doesn't work. I've been pretty lo-fi about it and just been going to like SparkDex and seeing which tokens have big pools and being like, oh, maybe we should like think about supporting that. It's been a pretty, so far, because other than the F assets that everybody asks about over and over, other than that, it hasn't really been that clear exactly like what assets would be good or anything. It's not like we have like a DAO where people are constantly making proposals and things. It's more like we just have the Telegram group and people just chat. So yeah. Cool.
Yeah, I'm very curious where DeFi on Flare is going to come, because I mean we've been talking about incentives, and most other protocols are based on fees, not necessarily on incentives. So like we still have some way to go until Flare can sustain itself just by the volume of fees generated. Like speaking of the general ecosystem, not just Cyclo.
Yeah, one thing that is good about Flare is like, at least for now, like the network fees are actually quite affordable. So it is a good place to just try things out. If you wanted to try out Raindex or whatever, it's a great network to try it out on because it's practically free. So you can mess around with $10 quite reasonably, actually.
Totally. Yeah, that's what I always tell people. Like in other networks, my learning process would have costed thousands of dollars just in network fees. And then Flare, that and between the incentives, which are nice, you don't have to be so stressed, and you can take the learning process much easier because I mean, on Aerodrome, every time I enter a pool, like something happens and I get out of it, and then I'm like, fuck, this is annoying. So, and if I go wider, then I'm not making any money. So I'm like, why am I even bothering here?
Stuff can get pretty complicated. Yeah.
Cool. Thank you so much, guys. I hope you have a good night, and this has been incredible. I want to watch it again and like, yeah, try to digest all the information that you guys just shared.